Greetings everybody, this is Bob Kramer with Financial Partners giving you your May economic and market update. Well, the month of May is upon us, but the month of April is still in our minds. And with that in mind, volatility rang the bell in April as we were on a roller coaster of returns. The tariff announcement, followed days later by a 90-day pause, have sent stocks and bonds on that roller coaster ride. A quick example of that, the day that the tariffs were announced, within 2 days of that announcement, the market declined by 10.5%, causing anybody a little stir in their heart by looking at those red results. However, right after the 90-day pause was announced, that day, 9.5% improvement on the S&P 500. Incredible roller coaster changes, and we're going to ride this out. We feel like this could be a very good year, but we're going to ride this out depending on what's going to happen with those tariffs. The big question, obviously, with the economy is what the ultimate tariff environment will look like. Obviously, we are not in favor of tariffs. While the odds of a recession may have increased, there's some recent economic update that may refute that position of heading into a recession. Let me just give you a couple of examples. First of all, the Institute of Supply Management service sector, which comprises about 2/3 of economic output, actually showed improvement last report with a number exceeding 51, indicating growth in this sector. So good growth in the service sector, which is a very large portion of our economic output. Employment numbers have stayed steady. It's still strong, even with layoffs and terminations right now lower than expected. Unemployment is right around 4.2%, which is really a pretty healthy number. And then in equity markets, let's just talk about the month of April. Even with those tremendous rides up and down, the S&P was only down about less than 1% for the month of April. Year to date, the Standard & Poor's 500 is down 4.9%. The Dow is down about 3%, 3.2%. The Russell 2000, which are those small cap stocks, down 11.5%. NASDAQ, which is the primary tech-heavy sector, down 9.48%. And really the standout of all of these is the MSCI International Index, which excludes U.S. stocks. That has shot up 9% year to date. Really a standout for the year. Inflation has cooled to a year-over-year reading of 2.4%, and that's really the Fed target. It is much better outlook for inflation presently, but the tariff card could pose a vastly different picture in the months ahead. I focus on earnings every single month, especially on quarterly earnings when they come out. With the majority of the big tech firms and the S&P 500 reporting earnings, about 56% have reported this last week. 74.5% reported that they have exceeded analysts' expectations, which is terrific. This is a positive report. We feel that the Fed has baked in probably a 3 to 4% rate hike. Usually the Fed has been looking at quarter point hikes or declines when they do decide to move the needle, and we don't expect the Fed making any movement in May. When Warren Buffett asked his mentor, Benjamin Graham, what is making the stock market flourish? Graham simply looked at him and said, "It's earnings, stupid." I don't know where he has the confidence to call Warren Buffett stupid, but he was still his mentor. So many components are affecting the market, and in fact tweets are really, for at least a short term, affecting the direction of the stock market. Please give us a call if you would like to discuss your own personal situation and accounts, and we'd be glad to help. Hope you have a great May, my favorite month. Enjoy this nice sunny skies and warmer temperatures. Take care.